Coinbase is not going bankrupt. In fact, one of the biggest deals that was released today in crypto history shows that Coinbase is poised to thrive over the next couple of years. Hey, everyone, I'm Ian King with your Winning Investor Daily weekly update. And I'm going to talk more about Coinbase in a moment. But before I get into it, please go ahead. If you like our content, feel free to smash that like button, hit subscribe if you haven't subscribed to our channels, and any other comments you might have, please go ahead below and ask those questions or comment on the videos. So let's talk about Coinbase for a moment. Now, a year ago, I went on this channel when Coinbase had its IPO, and I said, do not get involved in its IPO. The company was valued at $100 billion. I thought that was way too much. And I also believe that there was a considerable amount of competition in the crypto sphere for Coinbase. And it was also coming at the time of the market when crypto was really peaking. A year later, I have a different view on Coinbase. The stock has dropped from a peak to low of about 90%, right? It was valued at $100 billion at one point, and it got down to about $12 billion a couple months ago. And the reason for that, the reason for why everybody thought Coinbase was going under, is because there was mass liquidations happening in crypto. Ethereum had dropped 70 or 80% from its highs. Bitcoin was down 60%. And there were other crypto lenders, other crypto platforms like Coinbase that were just getting in trouble, and they've fallen by the wayside. I'm talking about Celsius and Voyager and crypto hedge funds like 3 Hours Capital. And what this will lead to is a scenario where the strongest platforms survive and actually grow through it. Okay, so think about a scenario where you're involved in a marketplace, no matter what you're selling, and all of a sudden there's an event, an exogenous shock that hits the market, and the rest of your competitors that aren't properly leveraged or aren't properly capitalized all decide to go bankrupt all of a sudden. So that's the position basically that Coinbase is left in, where a lot of its competition was essentially wiped out in the recent crypto sell-off, and that is going to strengthen Coinbase's position in the future. Now, the big news that happened today, the reason why the stock shot up as much as 30% this morning, is that they signed a deal with BlackRock. Now, BlackRock is one of the world's largest asset managers with over $9 trillion in assets under management. And what that's going to enable is institutional investors are going to be able to better manage and trade their cryptocurrencies on Coinbase's platform. So there will be a direct connection between BlackRock's offering for their institutional investment management platform and Coinbase Prime. And this will allow BlackRock's customers to trade crypto assets, and also they will be able to custody them with Coinbase. This is a huge move for Coinbase. It's the largest deal in crypto that I can remember. Now that's the first time you have $9 trillion worth of institutional investments that can now be allocated to crypto. It further solidifies crypto as this new burgeoning asset class that is definitely here to stay. And it's also going to benefit Coinbase over the long term, because other large institutional managers will see that the partnership with BlackRock is working, and so they'll be incentivized to start migrating to Coinbase's platform. So this is just massive news for Coinbase all around. And I want to just take a look at the chart, because it did have an incredible reaction to the news this morning. Let me just pull up my Brave browser here, and you can see Coinbase, which peaked way back here in November of 2021, has sold off about 95% from its highs. And then today, the news shot the stock up to $115. It's since pulled back. I think one of the reasons why the stock was up so much this morning was because there are a lot of shorts in the stock that were forced to cover on this news. So you see a lot of hedge funds that are short wind up getting margin calls on the open and have to, they go and hit market, and then the price they pay is just zany. But it's starting to settle down into a range where I think it's going to find some footing and then continue this rally off the lows, especially if the crypto market continues higher from here. Next, I received a bunch of questions in last week's webinar, and so I want to address them right now. The first question comes from Novo, and she writes in, did you say you need 32 Ethereum to be able to stack when the upgrade comes? And basically, with Ethereum, when it becomes proof of stake, you're going to need 32 tokens to become a node and to receive fees. Now, you don't necessarily need to create your own node. There are going to be different services available that will let you pool with other investors in order to receive those staking fees as well. So it's not just that you have to have 32 Ethereum, which right now is something like $50,000. You'll be able to pool with other investors for smaller dollar amounts, stake and receive those fees. The second question I got is that what's the benefit of staking Ethereum? Well, and this comes from Stan. Thank you for the question in last week's update. Now, the benefit of staking Ethereum is that you will earn those fees, and most analysts come up with the estimation about 10 to 15% yield you'll be receiving for staking and stabilizing and validating transactions on the network. So that's a pretty hefty return, 10 to 15%. I don't know if it's going to hold, in perpetuity. Perhaps 3 months down the road, 6 months down the road, the amount you get is lower, and the market will find some equilibrium, because if there's a 10 to 15% yield, you'll see more coins get locked up and staked, and that will result in lower yields because the amount of fees is going to be the same, but it'll have to go to more coins. It will have to be distributed among more coins. So I expect that the initial yield is going to be really high, and then you'll start to see lower yields as time goes by. But right now, the estimate is 10 to 15% returns for holding and staking Ethereum. The other news is that if people see that this 10 to 15% yield, they can get it by buying Ethereum, it will incentivize more people to buy Ethereum and stake it. So thank you for that question, Stan. Next question comes from Rashad, and he asks, thank you for the informative video. Any action is needed if I'm holding Ethereum? Well, right now, because the merge hasn't happened and won't happen until at least September, you don't need to do anything with your Ethereum, but you will have an opportunity to stake it on various platforms when the merge finally happens. So no action needed to do right now. As far as I know, your token should automatically upgrade if they're held on Coinbase or other platforms, but I will keep you posted when I hear more news on that. So that is it for this week's webinar. I want to thank everyone for tuning in. Any questions, comments, please hit us below. If you haven't liked our video yet, please be sure to smash that like button. Help us get our content out to other YouTube viewers. This is Ian King for Winning Investor Daily. Have a great weekend, and I'll talk to you next week. Thank you.